Hello everyone, we are going to start with another session, and in this session we are going to learn how to post all these entries which we have passed in our class last in the last class. All right, so let's start with this. So first we start with opening up these accounts which are already given here, because I think in financial accounting we also proceed it like this. So let's make 4T accounts, and these 4T accounts are usually a compulsion because you have inventory in your account. So we will start with raw material. The opening balance of raw material is around 20,000, right? And then there is work in progress. Work in progress is opening balance is around 30,000, right? And then finished goods is 50,000. And the last one is cash. Cash is around 200,000. Right, so the first entry is what? The first entry, it says that the company bought material for 75,000 in cash, right? So we will make a debit entry here with the reference of cash, and we credit cash with the reference of 75,000, right? Then 73,000 of raw material were issued. 67,000 was direct material, and the remainder was indirect. So out of the 75,000, 67,000 will be issued as direct material. So that will become the part of work in progress. So we will make a debit entry here, 67,000, and there will be a credit entry of 67,000 here with the reference of work in progress. And then it says the remainder was for indirect material. I think 73 minus 67 is 6,000. I think we passed that entry. So production overheads 6,000, and we haven't made any account of production overhead, so let's make it here. We'll make a debit entry of 6,000 here with a reference of raw material, right? So what's next? Indirect wages, 134 direct wages, and I think 134 minus 152. Let me check. 152,000 minus 134,000 is 18,000, right? So 18,000 is for indirect material, indirect labor. So we have to open a T account for wages, right? Because we don't have wages T account. So wages account debit with a reference of cash, and with the amount of what? 152,000. And 152,000 here. Right, and out of this 134,000 is for direct labor. So direct labor is parked in work in progress. So wages account, and wages account will be credited with 134,000 with the reference of work in progress, and then 18,000 will be transferred to production overheads. Production overheads are here, right? It's wages account, right? And then we are done with this. Additional manufacturing overheads of 176,000 were incurred and paid. So 126,000 production overheads debit with the reference of cash, and cash credit with a reference of 126,000, right? 120% of direct labor costs were applied. Direct labor cost was around 134,000, So 134,000 times 1.2. Let me check. Uh, it's 130. Sorry, 134 times 1.2 is around 160,800. So 160,800 will be classified as production overheads, and we will make our credit entry in production overheads with the amount of 160,800. Right. Right. So what's next? Cost of goods sold of 240,000 were transferred to the finished goods. So 240,000 debit entry. Right. And from work in progress, and work in progress is 240,000 with the reference of finished goods. Right. And then company sold goods costing 210 for 400. So finished goods will be credited with 210,000, and we'll make another T account of cost of goods sold 210,000, and with the reference of finished goods. Right, because we transferred these goods from finished goods, and we sold it at 400,000. So 400,000 cash debit with a reference of sales, and we have to make another T account of sales. Right, so we are done with all the entries. Now you just need to pause this video and try to find out the closing balance of raw material, work in progress, and finished goods. All right, so I just completed these three accounts. So the carry forward balance is 22,000. Right, it's not a big deal. You just need to add the debit side and take the difference. Right, so this is the carry forward. This part 22,000 will be transferred to the balance sheet. 151,800 will be transferred to the balance sheet. Finished goods of 80,000 will be transferred to balance sheet. So all these items will make the final entry of inventory in the balance sheet. Right, and then there are few other items which will be classified as P&L item. Okay, fine. Wages is something which will cancel out, because whatever is in the debit side will be on the credit side. So and you have to make a carry forward balance of cash, so it's not a big deal again, because cash is an asset. The only thing which I'm actually concerned about is the entries which we pass in sales, the amount which we charge to profit and loss account, which start with sales, production overheads, and cost of goods sold. So these are actually those entries which are really important, and out of all these, production overheads is really important. So what we are going to do now is we are going to make a profit and loss account, and let's see how we can do that. In profit and loss account, we normally start with sales. If you recall the P&L statement, so we'll start with sales, and then we charge cost of goods sold in order to calculate gross profit. Right, so let's start with sales. Right, and in sales we have a credit, and if you want to transfer these 400,000 to your profit and loss account, what you will do, you need to make a debit entry here with the amount of 400,000. Right, and with the reference of P&L, and in profit and loss account will be credited with the amount of sales and with the reference of 400,000. So this is actually the same thing which we normally used to hear, that income is always credited to the P&L and expenses are always debited to the P&L. So this is the same kind of thing. Right, so sales minus cost of goods sold, if you want to transfer this 210,000 to your profit and loss account, what you will do is you will credit this 210 this account with 210,000 and make a debit entry here with the reference of cost of goods sold with the amount of 210,000. So 400,000 minus 200,000 will give you the gross profit. Right, now the next thing which I am going to mark here is something which we have not exactly studied till now, but again it's an important thing. See, now try to focus on production overheads, T account. This is really important. Right, Um, in the production overhead C account, this debit side is actually representing the actual overheads which incurred during the period, and the credit side is actually representing the absorbed overhead during the period, right? So, and we know that the difference between actual overheads and absorb overhead is called the either under absorption or over absorption. So let's see if it's under absorption or it's over absorption. So try to add these debit side and try to add this credit side, right? So 6,000 plus 18,000 plus 126,000 is actually 150,000. So on the debit side we have 150,000 and on the credit side we have 160,800. So if you deduct 160,800, we are getting 10,800 balance, right? And 10,800 balance is actually at this side. And if the balancing figure is on the debit side, this is representing what? This is actually representing that your absorb overheads, because on the credit side we have absorb overheads. So this is representing that absorb overheads are actually higher as compared with actual overheads. So what we can write here is that 10,800 and 10,800 is over absorption, right? So what actually over absorption, how we treat over absorption in the profit and loss account? um, since this is an over recovery of overhead, I will further explain it in absorption and marginal costing, but just for the understanding purposes, since this is the over absorption, over recovery of the overheads, it's going to increase your profitability. But the actual treatment, actual reason is something else. I'm not going to discuss it right now because it's too early to discuss that. We will discuss it when we'll do absorption and marginal costing. So what we will do here is that we will actually, this is the over absorption, but we will close this over absorption in profit and loss account. So if we are making a debit entry in the production overheads, so and we are transferring it to the profit and loss account, what entry we will make in profit and loss account? Profit and loss account will be credited with this amount. 10,800, yeah, right? So since this amount has been credited, which means that the profitability has been increased. So if you take the difference of the debit side and the credit side, you will get the profit or loss, right? So if the balancing figure is on the debit side, it will represent the profit, and if the balancing figure is on the credit side, it will represent the loss, right? So obviously we are having a loss, a profit here. 410,800 is on the credit side minus 210,000 on the debit side. So clearly we have a profit of 20,800. Sorry, 200,800. Actually, this is a gross profit because there's no administration, selling, and marketing overhead. So, in the presence of all those overheads, we charge it in the profit and loss account, and then the balancing figure would have been the net profit. Now, coming back to this production overheads account, so if someone asks me to make a double entry of this over absorption, then what will be the debit entry of over absorption? Try to pause this video and think what we did with what kind of entry, what entry we can pass with this over absorption of overhead. In case of over absorption, production overheads have been debited. There is a debit entry in the production overheads T account. So there will be a debit entry in production overheads T account, and there is a credit entry in the profit and loss account. Right? What if the same figure is classified as under absorption? There will be a reverse entry. Obviously, P&L will be debited with the amount of 10,800, and production overheads will be credited with the amount of 10,800, right? So the easy way to remember this entry is try to focus on whether there is under absorption or whether this is an over absorption. Because if this is an over absorption, it has to increase the profit, and profit can only be increased if we make an entry, if we make a credit entry, right? So whenever there is an over absorption, you have to credit your profit and loss account. So what will be the entry on the debit side? Debit side will be the production overheads, right? And if there is an under absorption actually shows the under recovery of overhead. So in that case, what we can do is we can, because we have to reduce the profits, so we have to pass an entry, we have to charge it to the debit side of PNL. So this will be profit and loss account will be debited, and production, we will make a credit entry in the production overhead T account. So in case of under over absorption, this is the entry which we are going to make, right? So again, overhead MCQs are quite common. So just remember, okay, fine, let's try to study from here. See, this, whatever the actual overhead is, whether it's raw material, because this is the actual overhead, actual raw material, this is actual indirect labor, and this is actual indirect expenses, right? So whatever actual cost is, that's always the part of the debit side. And whenever there is absorb overhead, production overheads are always credited. So that's why the reason why we are crediting, why we are making a credit entry in production overhead C account is because we have to compare actual and budgeted. So definitely absorb overheads can not be charged to the debit side, right? And because in that case we cannot make the comparison, right? So I hope you got this question, I hope you understood this question. This is an easy question, right? Let me know in case you have any issues. All right, thank you, take care, Allah Hafiz.